Carvana shares are rising on a surprise, a large profit and a terrific guide. Carvana founder and CEO Ernie Garcia, usually on Mad Money many times, joins us first on CNBC Now. And I know that I have to join Adam Jonas in almost saying congratulations, Ernie. He had to hold back because it was such a great quarter. Thank you for coming on the show.
Thanks for having us. Really appreciate it.
All right, so let's go to this line that is so antithetical to the industry that you're in, although that it almost makes you feel like you're not in the same industry. It is very rare to be both the fastest growing and most profitable company in a category. Then I think people should understand that there's only been one way to make money in this business, where you sell so many cars and you try to do it with ribbon gross margins. You're not doing that at all, are you?
Yeah, so Jim, we started this company 11 years ago, and we decided to build something that was totally different, and that meant a completely different supply chain. It meant a ton of investment. Over the last 11 years, we've invested about $10 billion in trying to build a completely different supply chain, and all that fixed cost investment is now coming back and paying off, and it's showing up in much lower variable costs. And so it means that we can give customers a great experience, we can grow really quickly and efficiently, and then we can also hit these really exciting milestones, like having the best or the most profitable quarter of any automotive retailer ever. So we're extremely excited about all that.
Sold over 100,000 cars in Q2. That makes you right there almost at the top, doesn't it?
We're number 2 right now, but our sights are set much, much higher, so we'll keep going.
Okay, so you have an offering that's being done, and it wasn't really clear to me. I know it's some of your stock, but I thought that what was most interesting, maybe you can give us the number, is that you list as one of the risk factors short sellers making up stuff about you. Is that still a problem?
You've been through our risk factors in more detail than I have, it sounds like. So I think, there are stories out there. There's always going to be stories. That is what it is. We don't focus too much on that. I think we always just try to keep our heads down and keep moving forward. I think, there's that old famous saying, in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. So we're working on building mass, and we'll keep doing that.
Hertz has an interesting story today. They're accelerating them selling of all the inventory they have, which are, yes, Teslas in large part. Are you a buyer of used Teslas, and are they selling well?
Sure. So, let me answer that question a little more broadly. I think, we sell kind of the cars that Americans love. We look at what customers are buying. We buy those from customers and at auction, and then we recondition them. We get them ready for sale. We sell them to our customers. So that means, we're selling Equinoxes. We're selling Jeep Grand Cherokees. We're selling all the cars that you just expect, Escapes. But it also means, we attract a customer that's a little bit younger, a little more affluent. So we do disproportionately sell EVs. We have a higher market share in EVs than we do in ICE. And so our top selling car is Tesla Model 3. So we do sell a lot of those as well. But in general, we're trying to make sure that buying a car is easy and fun for our customers, and we're giving them what they want.
There was a moment on the conference call near the end where someone said, look, you say that you love your customers. Are you going to cut them in for more of the profits now that you're making money? And I think people should listen to your answer, because actually I still think that you're true to the customer more than you are to anybody else.
Yeah, I think something that's always true of every company when you start is you have to build something that's better for customers, or you have no chance. I think it'd be really easy for companies as they age and mature to focus on, margins or this financial number, that financial number. But at the end of the day, all that really matters is that your customers want your product more than anyone else or anyone else's product. And so I think, we're really focused on continuing to make gains. We've made enormous gains in the last, year. We improved our unit economics by about $2,000 while holding our customer offering flat. That's pretty incredible. And I think if we can continue to do that, it means that we're going to have a lot of gains to give back to customers to further separate our offering. And I think that's the dream. We want to build a great company. We want our customers to love what they get.
Ernie, looking at a chart of the stock, we all remember before the turnaround took place, shares got very, very inexpensive, a lot of doubts, a lot of headlines about near-death experiences. Was there anything about that time that fundamentally changed the way you think about running the business?
I'm gonna tell a brief story if it's okay. I think, we started this company in 2013 and we launched out of Phoenix, Arizona. We were capital intensive. We had a finance arm. That didn't fit the venture capital pattern. We really struggled to raise venture capital. As a result, we went public after just 4 years. That's very early in a company's life to go public. For the first part of that, I don't think we were that well received. We were one of the worst IPOs of 2017. We came out at $15. We were down to $8 a couple weeks in. By 21, people thought we were onto something. And so that was a nice brief moment. And then, car prices went up, rates went up. We made a big bet on our future and financed it with debt. Investor perspectives changed quite a bit in 22, and our stock went down 99%. And that's not part of the dream. That's not something you foresee. That's not something you imagine. And in those moments, unfortunately, I think a reality is people will line up to kick you when you're down. And so, you wake up every morning and you read the articles and you see the news.
Who didn't line up?
People do, unfortunately, line up. If you want to make a friend for life, go extend your hand when someone's having a tough time, and it will really help. But I think the people inside Carvana, they responded incredibly well, and for that I will be forever grateful, because in those moments I think the biggest risk is that people decide to give up. And the people in Carvana came together. We did our best work. One of our values has always been we're in this together. But that's an easy thing to write on a wall. It's a hard thing to make true. And in moments like that, you get tested. And the people of Carvana have done an incredible job. And so to all of you, thank you so much. You did this.
Okay, so Ernie, people have to know, I bought a car. I bought a car from you guys for somebody, and they didn't like the car, and I returned it. The stock was at $3. I said, "This is a win. Gotta love the stock." But you also had help, didn't you? You had some people from a big private equity company came in to help you.
So, I think early on, we had some great investors. Along the way, we had a lot of investors that stuck with us and believed in us. We've certainly had interactions with different debt holders and everything that have been very supportive. So I think, these things never happen alone. That's just not how it works. I think building anything is always a battle. It's always harder than you imagine up front. And I think you got to get a little lucky along the way, or it's just not going to happen. But we've been lucky to catch a couple breaks, and I think we've been very lucky to accumulate a team that's been very resilient and been able to fight. And so I'm just extremely proud and extremely grateful, and I think we have a lot left to do.